Welcome to today's Bitcoin Overview News Explainer for July 26th, 2026. Look, if you've been watching the charts this week, you know exactly how crazy things have been. It is so easy to get caught up in the panic of those big red candles, right? But as focused learners, we know that these moments of wild volatility aren't the time to panic, they're the time to zero in on the data. So today, we're going to cut right through all that noise, dig into what the numbers are actually telling us, and map out a future Bitcoin price prediction.
But before we get into the heavy data, we need to ground ourselves a bit. Warren Buffett famously said, "Investing is not a game of IQ." And honestly, that hits the nail on the head for crypto right now. What he means is that mastering your own fear is way more important than raw intelligence. The market literally exists to test your conviction. Our goal today? We're going to replace that emotional fear with cold, hard facts.
Here's our roadmap for today's explainer. We'll start with market fear in the present, then move into macroeconomic and ETF flows, explore the hidden meaning of on-chain metrics, and finally, dive into a power law price prediction. All right, Section 1, Market Fear and the Present. Let's take a look at where we actually stand. Grounding ourselves in today's reality, July 26, 2026, Bitcoin is sitting right at $64,052. This is our baseline for the whole analysis. Now, depending on when you bought in, that number might feel like a frustrating sideways grind, or it might feel like a really painful drop. But, context is everything.
Let's zoom out a bit. When you contrast the absolute highs of October 2025, when we hit $126,210, with our current price, we're looking at a brutal 49.2% maximum drawdown. If you're feeling stressed right now, hey, that totally validates the pain you're feeling. A nearly 50% haircut from the top is absolutely going to shake out the tourists. It tests the resolve of even the most seasoned holders. And unsurprisingly, this steep drop has pushed market sentiment straight into the extreme fear zone. We are currently sitting at a 28 out of 100 on the Fear and Greed Index. The market is scared, plain and simple. But as we've seen time and time again, peak fear usually means peak opportunity. Well, as long as the underlying fundamentals are still intact, of course. Moving on to Section 2, Macroeconomy and ETF Flows. Let's track what the big money is doing. So we've got three major bearish headlines acting as massive headwinds right now. First up, the Federal Reserve's FOMC just delivered a pretty hawkish 9-3 hold, keeping rates stuck between 3.50 and 3.75%. That kind of stubbornness on rate cuts really chokes off capital. Second, the Clarity Act, which is a huge piece of crypto legislation, has completely stalled out right before the August 7th Senate recess. So regulatory clarity is just stuck in limbo. And third, stablecoin exchange inflows, which is basically the dry powder waiting on the sidelines to buy, have hit their lowest point since 2025 at just $2.3 billion. Basically, without that fresh liquidity, any kind of immediate rally is pretty much capped. And Wall Street, they reacted to those headwinds aggressively. Over the last week, U.S. spot ETFs saw a punishing 4-day red streak, bleeding $494.4 million in net outflows. Institutional money was definitely taking a step back. But get this, on July 25th, we finally saw a tiny glimmer of hope, a green flip with $32.1 million in inflows. It's small, sure, but it suggests that the massive institutional bleeding might finally be clotting. That brings us to Section 3, the hidden meaning of on-chain metrics. Let's look under the hood. When we pull back and look at the aggregate on-chain metrics for late July, a totally different narrative starts to take shape. The actual structural health of the Bitcoin network is telling a drastically different and honestly way more optimistic story than all those panicked headlines we just talked about. One absolutely crucial metric here is the MVRV ratio, which is currently sitting at 1.21. Now, if you track the deep data, you know that market value to realized value is literally one of our best thermometers for network health. At 1.21, the market isn't overheated, but it's also not in some catastrophic capitulation. Mathematically speaking, the price is sitting at a very healthy, neutral, and I'd argue deeply undervalued cost basis. The network itself is completely solid.
But we have to contrast that healthy global picture with the Coinbase premium, which is sitting at roughly negative 0.09%.
Why does this matter? Well, because Coinbase is the go-to exchange for U.S. institutions. A negative premium here is basically a smoking gun. It proves that the recent price drop is a highly localized, U.S.-driven sell-off, while the rest of the world is actually just holding steady. It perfectly backs up those ETF outflows we looked at earlier. So no, this isn't a global failure of Bitcoin, it's just targeted U.S. spot desks hitting the sell button.
All right, final part, Section 4, Power Law Price Prediction. Let's zoom way out for some long-term forecasting.
If you want to visualize Bitcoin's current price against its actual long-term trajectory, the Power Law model is an incredibly powerful tool. Instead of getting totally lost in daily candlestick wicks, the Power Law models Bitcoin's adoption and price curve over years, even decades. It gives us these logical, mathematical support bands to rely on. So, let's break down these support bands. Our current price is $64,052. Now, the model says the 2026 floor should be $75,976. And yeah, we are currently trading 15.7% below that 2026 floor, which, by the way, is exactly why the market feels so incredibly heavy right now. But look at the absolute baseline. The 2025 floor is $44,096. We are still safely 18.4% above that line. In the grand scheme of the Power Law, dipping below the current year's floor while holding the previous year's floor, that is classic textbook accumulation behavior.
And that brings us to the single most critical takeaway of this entire explainer. When we run today's numbers through the Power Law model, the 2026 fair value for Bitcoin is calculated at $180,895. Let that sink in. Comparing that to today's price of around $64K, it means Bitcoin is currently trading a massive 64.6% below its mathematical fair value. So rather than being a reason to panic, the hard data strongly suggests we are sitting right inside a historically deep value accumulation zone.
So this leaves us with one final, absolutely vital question to ask ourselves. We know that localized U.S. selling is driving the short-term dip, right? Meanwhile, global on-chain metrics are incredibly healthy, and the long-term mathematical models are pointing to a massive undervaluation. So, will you let yourself be swept away by today's market fear? Or will you use this data to prepare for the $180,000 future that the fundamentals are clearly pointing toward? As always, the choice is yours. Thank you so much for joining me on this explainer. Keep your focus on the data, and I'll see you next time.